just imagine. Nothing I can see but you when you dance, dance, dance. Feel good creeping up on you, so just dance, dance, dance. Come on, all those things I shouldn't do, but you dance, dance, dance. And ain't nobody leaving soon, so keep dancing. I can't stop the feeling, so just dance, dance, dance. So just dance, dance, dance. So just dance, dance, dance. I can't stop the feeling, yeah. So keep dancing. Oh, yeah, yeah. I can't stop the. 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 Nothing I can see but you when you dance, dance, dance. Feel good creeping up on you, so just dance, dance, dance. Come on, all those things I shouldn't do, but you dance, dance, dance. And ain't nobody leaving soon, so keep dancing. Everybody say. I can't stop the feeling. Oh, no, I can't stop the feeling. I can't stop the feeling in my body. Break it down. Got this feeling in my body. Can't stop the feeling. Got this feeling in my body. Can't stop the feeling. Got this feeling in my body. Come on.
Hello, everybody. Welcome, welcome, welcome. We're going to get started in about 1 minute, like literally 60 seconds, start the clock.
Maybe now it's on my Bluetooth.
All right. Let's see, can I spotlight multiple people?
Unmute.
All right, Brett, can we hear you? You want to just test your mic real quick?
Yeah, testing check. Can you hear me?
Flawless. Joe, can we hear you?
Test. Yep. I don't know, can you guys hear me?
Flawless. Perfectly. NECA, can we hear you real quick?
Yes. Hi.
Awesome. Perfect. All right. Good afternoon, everybody. Happy Valentine's Day. I will be accepting flowers until the end of the day from each of you. Thank you. You'll get my email at the end of this. You can just send them DoorDash it right to me. So thank you, thank you, thank you. We have like an amazing presentation for you today. Very excited. I have 3 of the top agents in Silicon Valley standing in front of, well, I guess standing in their own rooms, but looking right at me. I've got Brett Jennings here from Real Estate Experts. I've got Joe Velasco here from Compass, and I've got NECA Jenkins with Onyx Wealth Realty. These 3 rock star human beings are not only amazing agents, but they are also incredible human beings. They've given up their Valentine's Day with the people they love to share some love with you all about real estate. So as we get started, I'm going to record this session so that as you all who are here, I think we're already recording actually. Yep, we are. Great. As you're here, you will get a copy of this recording if you so choose to want to rewatch, because the things that you receive from the mouths of these human beings change your life forever. So can everyone see my screen? You see those three headshots? Great. Thank you so much. All right, let's get started. So I have a quote for you here. This is from the chief economist, Ally Wolf from Zonda, which is, I wonder if some consumers have worked through the 5 stages of grief of higher mortgage rates. And I don't know if you're familiar with the 5 stages of grief, but they are exactly what we've all been going through when it comes to these mortgage rates. So the first thing is denial. We tell ourselves, absolutely not. There's no way, don't worry, it's gonna be fine. Mortgage rates won't go above 6%. They won't go above 6.5%. They won't go above 7%. We deny, deny, deny. And then we're angry as hell. Our customers, our clients are angry. They're like, oh man, I should have gotten in when the rates were lower. I should have dove in faster or sooner. And you're sitting there saying, I know I tried to tell you, but you didn't listen to me. And then number three is the bargaining side of things. They're like, oh man, this is where they start to negotiate with you or themselves, or maybe I'll wait. I'll wait till more rates go back down, or I'll wait till I see the market pick back up, or till maybe you've heard prices drop to the bottom of the barrel, like 2008. You probably heard every excuse in the book as to why they're not buying. And then there's this sadness, there's this depression, which is kind of where we're at right now, I think, which is like, all right, this is where it's going to be. This is where it's at, and it's not great, but here we are. And so and then we've got to move these people from depression into acceptance, because if we can't get them into acceptance, we're not going to sell any houses. And so these three human beings today are here to talk to you about how to get your buyers and sellers off of the couch, off the fence, and into action. So I've got a quote for you from Brett, which says, getting people off the fence requires that we start with the conversation they are having in their mind. Brett, do you want to talk about this a little bit?
Yeah, I mean, the reality is any good marketing or sales or influence for that matter, we say, it has to start with the conversation they're already having in their mind. It's called a market to message match. And one thing that we I think as agents assume sometimes is the fact that because some of this content and things that we're going to talk about seems so familiar to us, we assume that other people already know it, and that's not true. But ultimately, it starts with, what are they hearing, Joey? And I think you can continue on, and we can talk a little bit about that. And what are the things that are keeping your clients on the fence? And it's everything that they're hearing in the news. And if you see, some of these little snippets of headlines down below, falling stock market, recession fears, a new recession, debt, all the stuff that is really happening out there. And the next slide, I think we hit on kind of what are some of the top 3 or 4 that we're seeing locally. Forbes saying stocks are in a bear market as a housing crash to follow. CNN Business saying Silicon Valley layoffs go from bad to worse, and high mortgage rates discourage buyers and chill the housing market. I mean, this is the stuff that's swirling around in our clients' minds, and this is all the stuff that we got to address. But yeah, I think we're going to talk on really how Joe and NECA and myself are kind of addressing this with our clients.
Yeah, we are going to give you the exact talk tracks that these 3 agents are using to combat everything that you are seeing right now in the national news, and taking it and local news even, and making sure that you use it as an opportunity to convert the conversation back to the reality of the market. So we must control the narrative. Our job as real estate agents and real estate experts is to be the beacon, the source, the lighthouse of truth in the conversation about the real estate market. And honestly, headlines are built to draw people's attention. They're built to take you away and take you into whatever is the most emotional thing that we can do. And so our job is to get them out of emotion and get them back into action. And we do that by controlling the narrative. But if you don't know what to say, how can you control a narrative if you have no clue what to say to win it? So we're going to talk about that. People do not follow the best leaders. This is Donald Miller. They follow the ones that they can understand the easiest. So your job right now, our job here today, is to help you to clearly identify the issues that we're dealing with and communicate them with ease, with comfort, with control, with confidence, so that when the conversations come up, you have the talk track ready to go to turn the corner with your buyer or your seller, so you look like a rock star. So I want to introduce Joe Velasco. So Joe's at Compass. Joe's kind of the king of luxury. He's done, I don't know, about $200 million. He's just an absolute beast of a real estate agent. And he has a very simple approach that I think sometimes we try and get so creative that we lose sight of what we actually need to do. And so, Joe, can you talk a little bit about this idea of you don't tell them, you show them what's possible?
Yeah. Thanks. Thanks for having me on. Always a pleasure to do what I can for our fellow peers and real estate experts as well. But I think the biggest thing, that I'm doing is speaking specifically right now with an example of a buyer, because I think, the topic is, what we're doing to get, buyers and sellers off the fence. If we're talking strictly about buyers, it's education, right? Education is huge. And math is a universal language, right? So one of the things that I do, especially heading into the month of March, I use an example of one that I sold last year. And if you guys can pull it up on the MLS, I think it'd be great. It's 131 Curry Avenue in Morgan Hill. That one there, you know, I sold last year for $2,625,000. I sold it, I believe, March of last year, and there it is. Yep, sold in March of last year. I sold it for $2,625,000, and the client put a 20% down payment, which equaled, you know, $525,000. Right, that's what 20% was of 2,625. And the interest rate at 3%, the payment is actually, well, that's your principal and tax and insurance payment. So that's good. But the interest rate payment alone was $8,432. That's what the interest rate payment was on a 3% interest rate. And the taxes were $2,734 a month, right? So combined, that is correct, $11,654. That same house today, when we're talking about rates and you're getting the rebuttal, well, I'm waiting for the rates to come down, et cetera. That same house today, I can get it between $2 million and $2,050,000. Unfortunately, Morgan Hill's down about 25%, 28% in some pockets. But that same house today, the down payment is $125,000 better. So you can put that $125,000 to go work for you somewhere. But instead of putting down $525,000 on 20%, you're now putting down $400,000. So you could put a little bit more money in your pocket. And the payment virtually is the same, because at 5.25%, that's where I figured out they're at 5.5%. With taxes and insurance, yes, it comes out to $11,234. So not much difference. You know, yesterday I was talking to Brett a little bit about math being universal. And when, you know, if you speak Spanish and you're learning English, and I'll give that as an example, the number two, or the word two, let me go back. The word two means a lot of things. It means also, together, two objects. It doesn't matter what language you speak. You know, if you're learning, if you know Spanish and you're learning English, it can get confusing because of those reasons that I gave you. But when you give somebody this universal language of the math, and you break it down, you know, and you explain to them, you know, 3 + 7 in any language is going to equal 10. So just by showing them this and that education, and it's also just really good if you can be in front of them and do it, you know, be in front of them either on Zoom or in person, because a lot of times trying to do this over the phone, it just doesn't flow as good, you know, as it does when, you know, the example that I just gave you guys. So two things: you're not only going to save, three things. You're going to save money on taxes, property taxes yearly. You're going to save on down payment. But again, you know, the math speaks for itself in any language. You know, the payment's virtually the same. And I know this doesn't apply everywhere in the Bay Area, because some of the area, you know, in the Bay Area, I think overall, you know, we're at about a 10%, you know, we're at properties have dropped between 10 and 12%. But I think, you know, as Joey, you talked about earlier, controlling the narrative, you know, identifying where you're going to be showing and then giving that an example, or what the property is that you're going to be writing an offer on. That's, you know, what I do. And here it is, you know, that's what I do when I'm speaking to buyers in particular.
Got it. So just so I can jump in, because Joe, you and I talked about this yesterday. So that's one of the points, right, where buyers are jamming up. Is we talked about opened up this session by saying, you know, it's like buyers and sellers need to go through the 5 stages of grief to get to reality of where they are. They're still kind of like holding on, right? Like, oh crap, I could have got 3%, you know, 6 months ago, and that's keeping them stuck. But when you really pencil out the numbers, now not every property, right, is going to shake out like this. Joe, you and I looked at the market trends for Morgan Hill, and it just so happens the high end in Morgan Hill was down more than most of the market. But look at this, guys. If you were to take an example like this, and show them, okay, here's what that house cost when the price was higher and rates were lower. This is what the monthly payment was, and this is what the monthly payment looks like today. So it's really taking that opportunity to walk them through exactly what that looks like on the numbers basis. And I think that leads to another point that we want to make, is that in this market, right, all of us need to elevate our game. And you even though we're not mortgage experts, we need to know the numbers. And when I say know the numbers, like understand what the difference is in monthly payments for the different types of loan products out there. Because one of the things, Joe, as you and I were talking, that's helped me get some buyers into contract. I recently held an open house, and the buyer was pre-approved. This was in Sunnyvale, and the price point was about 2.8 million.
Mhm.
And the guy came through and he was talking about, I like the house, but man, it's going to be like 14,000 a month or something for the, the payment on this thing. And he was pre-approved for a 30-year fixed. And First Republic Bank has an interest-only product. And when I ran the numbers, I was pretty amazed because he was mentioning this thing about like, yeah, 6 months ago I could have got, or 9 months ago I could have got a 3% interest rate. And this is something that when we say know the numbers, you guys should all be familiar with, and what different types of loan products can do for you. Last year at the beginning of the year, interest rates were like 2.9%. On $1 million loan, that monthly payment on a 30-year fix was $41.67 a month. Right now in this market, your clients can get a 7-year interest only at 5%. Now, and on that same $1 million loan, it's the same monthly payment. Now, granted, they're not paying principal, but as we've talked about, and you guys have probably heard the expression, you want to marry the house and date your mortgage. Give them the opportunity that you can refinance your mortgage, but you can never refinance that price. Let's get you in at that lower price right now, and then get you into that kind of a payment. But yeah, so that's one thing that all of us can be helped by, and that kind of holds true in what Joe was showing in that example, how he carved this out. This is a 30-year fixed payment. This is not even an interest-only payment that we're looking at here, where the payments today, because the price came down, is similar. So I think one of the ways, Joe, you were just saying, is like show them the examples, what they could get before and what they can get now. Joe, you want to
Data.
yeah. So
Yeah, let's
keep going. Sorry.
So let's talk about sellers. Let's talk about getting sellers off the fence as well.
I know NECA actually, before we get into sellers, NECA, I know you had some really great things that you're doing in helping your clients, your buyers get off the fence, and your process is a little bit different. So NECA, do you want to share a little bit about your process? And Joey, you can let's just give screen control to NECA, because she's got her own screen share that she can do here.
That sounds great.
You're on mute there, Neck. Let's see.
Yeah. Hey, so yeah, I think, there's so much noise right now in the marketplace. TikTok, Instagram, Facebook, you've got realtors doing what they should be doing, which is showing up on video and offering advice and information to the public. And your clients get really confused and bombarded with a lot of different pieces of information. So one of the things that I try to focus on is anytime, whether it's a client of mine or someone on my team, anytime they have a question, no matter how small the question is, I pivot that conversation in a way to say, let's jump on Zoom, let me share my screen with you, or let's meet in person, right? Before we're in contract, or even sometimes during contract, especially if you have contingencies. I think, our ability to influence is far greater in person. And so they need to know that they can see, feel, hear you, trust you, and really believe what you're telling them, because we're in a marketplace where the appreciation overall and over time is far greater than a lot of other places. And that works to our benefit, to where when you're having the right conversations and giving the right pieces of information, you're telling the truth when you say, I still truly believe in our market, right? So sometimes being able to sit in person with them or on Zoom and share the data. And what I mean by that is like share your screen and go over with them all of the information that you have available to you. You can all see my screen, right?
Mm-hmm.
Yep.
Okay. One of the biggest things that my team and I always focus on is go over the Altos report with them, right? Like pull it up by, if you're looking at single family home, especially pull it up by city, and also literally have readily available, pull it up by zip code, because you'll see, you can just see the number, the graphs right here. It changes significantly compared to most zip codes compared to the city, right? So I just pulled up San Jose. as an example, but another important thing is to focus on this absorption, the absorption rate, which is far different than what it was just a few months ago, or just even a few weeks ago in some zip codes. So the reason that, you know, this report, it's a 6-page report if you pull the full report, and of course by houses or condos. Most of you have used this before, but if not, you know, reach out to us and you can get access in some way. But it's super critical that you go through these numbers with them and show them how it changes, because I'll have a lot of people that are maybe looking in San Jose and say, oh, well, you know, there's a ton of inventory, whatever. Okay, but you're not looking in all of San Jose, right? So let's focus in on the 27 homes in the neighborhood that you're looking at. And then let's focus in on the exact zip code, the exact neighborhood. So, and another thing that I do like to do is I will, you know, just go through here. Let's see. And when I'm talking with them, I actually start from this screen when I'm talking with clients, whether it's seller or buyer, but right now we're talking about buyer, I think, specifically. And I will start from this screen just to show them what I'm clicking on and what filters, because a lot of times, especially people that are super, super tech savvy, they have done a lot of research. Maybe they've looked on Redfin or Zillow and they think they know all of the data. I always like to slow it down instead of just giving them a number. Hey, I think your home will sell for this, or I think that home will go for this. We should offer this. I like to slow it down and show them I have access to all the data. Zillow and Redfin sometimes doesn't, right? Not everyone syndicates to both of those. We all know that. So I slow it down and I say, let's look in a mile radius of a subject property or a location you want to move to. And let's really dive in to what the data is showing us. So the reason I'm sharing my screen and showing this is one of the things that I did like years ago is I set up my screen here to show all of the things that I could ever want to talk about, right? All of these columns, distance, most important, and all of the information. I made it perfect and then I saved it. If you don't know how to do that, just reach out to me. It's super easy, but it does take a long time because sometimes the names of the columns are different. And I'm really looking here and saying, you want to be in this little zip code, right? Whether it's a buyer or maybe it's a seller. Let's look at in a 0.3 mile radius, what the data is showing us. Look at this days on market. That tells a story right there. And then if you were to go back further in time, like mid last year, you'll see how the days on market was much longer. So you're really showing them by data, and you know, you're in person with them or you're on Zoom and you're showing them the market is changing. So all the headlines that you're reading, they might be for other zip codes that don't have amazing schools, like where you're looking or something like that. And so you're showing them the list price versus sales price. And then that price per square foot is super important to a lot of people. And you show them how that scales up and down depending on the size of the property. And then of course you show them lot size and all that. So I go through this in depth and I spend a lot of time literally sharing my screen with them and going through like deal by deal. And then I kind of scroll through pictures and I say, like, if it's a seller, I say, does your home look like this property, right? Let's talk about it. So then you're arriving at a solution together or information together rather than them feeling like you're just telling them and they're just supposed to trust you. You're building that trust and that relationship and you're making them go through the activity as well. So biggest thing I think I learned earliest in my career is get in person as much as possible and really, really try to influence them and build that trust while you're in person with them.
Nneka, can I recreate or just sort of re-say 2 or 3 things that you said that I think are really important to touch on, which is there so many of us are who are making the calls are doing our best to drive for appointments. And what I love about what you said is most people are in protection mode right now. They're in that, like, trying to figure out, they don't know if they're serious or not. We want to get them off the fence. You allowing them the protection of having a phone call, and then on the phone call, flipping it over into a Zoom to show value is absolutely brilliant. So don't say no to a phone call, but also don't leave it as a phone call. Use that opportunity to lock down the time with your client and then use that time to actually get them onto a Zoom or a FaceTime as fast as possible. So strong. And then the second thing that you touched on that I think is really important is the same principle that Joe was talking about, which is the show, don't tell. Like you allow the data to represent everything that you're talking about without you having to be the person who they have to trust. Mm-hmm. They're going to trust you because of the data you show, but they don't have to just trust your word for it. So I think it's really important. And here's the other benefit too. You may not know what the data looks like, and you earn the right to have the opportunity to show them what that data is in the moment and have a real conversation about it. I think it's brilliant. Thank you for sharing that.
That's awesome. And NECA, so what you touched on, right, was what we call sharing quantitative data, like really drilling into the numbers, especially for our buyers or sellers. You know, most of our people, right, in Silicon Valley work in tech and do appreciate going through the numbers. I want to shift gears though, real quick, and talk about qualitative data, more data like about the market, what agents are seeing in the market, and how you can share that to influence your clients. And so, Joe, I want to call you out on this. I thought it was brilliant. Joe, you know, and I were talking, and he actually shared some of these things with me, where he would be going through his social accounts, whether it was Facebook or Instagram, and he would basically screenshot or even record notable basically agent posts like, hey man, I held this open house open. It was crazy. I had so many buyers. And Joe, tell me what your thought process is behind that. And then while you're talking, I'm going to pull up one of these posts that you're
Yeah, sure. So, you know, all of us, you know, should be on social media, and what I enjoy is I'm always good about if I see someone, you know, post something, especially something exciting, and I love sharing good news. I hate, you know, bad news, right? And good news is, you know, about the real estate market, about rates going down, or about busy open houses, or multiple offers. And I usually will compliment the agent, give them congratulations, to get a little bit more engagement, which is really cool. But one of the things that I do with my buyers is I record these, you know, most of us have iPhones, you know, you can hit the record button and actually, you know, record a post. Here's one from Oni. I thought this one was pretty awesome. If we go through it, it's on December 31st. And that's when I really feel the, you know, the market hit bottom and it started kind of, you know, coming back, right? So he talks about here what he saw on December 31st. If you guys remember, it was pouring rain. This guy had an open house in the 95124, didn't know what to expect. I went to go show this one as well, and he had over 200 people come through. And at the end, you know, they got over 200,000 over asking price. So what I do is I record these posts and I go ahead and I save them. And I like to just send them to my buyers that I'm working with. And I send them, you know, somewhat, you know, randomly, like I won't bombard them with a bunch of information. It's me talking to Ani there through Messenger on something else. But I'll go ahead and record that convo, and I end up just sending it to my client. Hey, take a look at this post. And I'll send them like 2 or 3 that I have saved like that. And I do that with multiple buyers just to let them know what is happening in the marketplace.
That's awesome. And again, I think it's, you know, it's what we talked about is we got to control the narrative for our clients out there. So I thought that was brilliant, Joe. And you've said some of those to me. And as you talked about how the influence that's having with your clients is sharing that positive news that's quote outside the news. So it's just coming from social on that.
One of the other things I wanted to talk about, if it's okay too, if we're switching over to sellers now, are we?
Yeah.
Sellers. You know, we're talking about, you know, what are we doing to get, you know, sellers off the fence? I think that is a little bit, you know, tougher in terms of, you know, get sellers off the fence to sell. I mean, they got to have, you know, a good reason, right? Because taking them from what they're probably currently in a 2.25% or 3% interest rate to sell your house and now, you know, buy something new and, you know, get an interest rate that's possibly, you know, 100% more in terms of rate, right? Going from 3 to 6. But again, education, right? Letting them know that, you know, they can get interest rates of, you know, 5.25%. US Bank has something out there right now where they get 3% the next, you know, the first year, 4% the second year. Those are definitely ways to motivate them, you know, to get them off the fence. But I think the biggest way, well, I don't think the biggest way for me right now it is to procure more sellers is really to double down on the marketing, you know, whatever marketing you were doing. And for me, it's always been farming and mailers. That's been always the most effective. It's not something, you know, that I created. It's something that's always been around, and I think it always will be. And if you were sending out, you know, if your farm before was 4,000 homes, well, maybe, you know, you need to double down and go to 8,000 homes just because we're going to do, you know, 50% less business this year in terms of number of transactions. But it is definitely a little bit more challenging to convince current sellers that are in my sphere to sell, but it's a little bit easier to convince sellers to sell just by doubling down on the marketing. So that's just something that I want to, you know, add. I think there's various reasons that sellers will sell now, and it's really, you know, finding out once you engage with someone in your sphere, if they're going to sell, they definitely need to have, a good reason, why, right? And is that, to either downsize or to upsize, but really finding out what is their, what are their hot buttons, right? And there's always going to be people, when you're farming, that need to relocate for, professional, reasons, right? Or there's going to be folks that have, health issues and need to be closer to their family members, who can provide support, or again, the opportunity to upgrade to a larger home while the market's down and make it up, in that way, or investment strategies, or maybe they have, a need for liquidity. I mean, there's many reasons why people would want to sell. And, the best thing that I can share with folks to like, hey, I, need to generate more listing is just to double down on your farming or whatever lead gen you were using in the past, go twice as much this year.
Yeah. So what you're saying in essence, Joe, is like the buyer conversation, as we talked about this, is a little easier to, the buyer conversation is a little bit easier to get those people off the fence and on the sidelines, because they're already kind of like, we're meeting these buyers at open houses right now, right? We got people calling in on Zillow Flex or sign calls. So we've got buyers that they're already engaging. And so we only have to move those people like half the way down the field to get them to the goal line, and doing that through examples of what they can get and shift them off the interest rate like you talked about. But with sellers, it's a little harder game in the sense that those people are very comfortable right now. And I think the reason we're going to see 30 to 40% fewer inventory is the fact that nobody, even if you found an awesome house, the idea of jumping from your 3% mortgage to a 6% mortgage is hard to swallow. But I want to talk about briefly like some of the other objections that we're hearing, and really, how to address those, because I think everybody's probably heard this one. When it comes to sellers, right? Like, oh, well, if I sell now, I feel like we missed the peak and, I'm losing 10%. If the market's down 10%, I'm losing 10%. And the reality is, right, we can all shift that conversation, is the fact that you're buying in the same market that you're selling in. So you're saving 10% on that purchase. One of the things NECA shared there was that Altos research. You can show those graphs and charts on price, what prices are, median price, both price and price per square foot, and take a look if they're moving out of their current area to where they're going. Because in most cases, especially if they're leaving San Jose or Silicon Valley, most of the markets that if they're moving out of the area are probably down more than we are down here. And that's what I've pointed out to people. Like I've got somebody who's selling in San Jose and buying in Tracy. And I was like, well, let's take a look. And it turns out San Jose, Santa Clara County on average is down about 10%, where Tracy's down 16%. I'm like, look, this is actually great. You're gaining ground by selling now. And in addition, when you purchase now, not only that, like one thing we might not think of that we want to remind our clients of is you save 10% on your property taxes, like forever. And this is not an insignificant number. If your clients are buying or moving up, especially in this area, like Joe, you ran the numbers on that one example in Morgan Hill, showing what your client's payment would be like, and things. I ran these numbers for, most of the time, if you got a buyer who's moving up in the San Jose or Silicon Valley area, they're probably moving from a house that's 1.2 to 1.3 and moving up to around that $2 million price point. And if we can see and say that the market's down 10%, that house that was 2 million last year is 1.8 today. Property taxes on that 2 million would have been 25,000. Today it's 22,500. So, if they live in that house for 20 years, they're going to save $50,000. So I think this was just another, like, to dovetail onto what you were saying about, how to make the numbers tell the story. So NECA, did you have some thoughts on kind of what you're doing to help your sellers kind of get off the fence and on the sidelines?
Oh, am I on mute? Oh, I'm not on mute. Yeah, I think there's one thing that I know we've talked about in the past. I think when you're a part of a team and a part of a larger brokerage that does a good amount of revenue, I think that it's important and smart, of course, always ask permission, to leverage the fact that collectively we've done a lot of business. So whatever area, whatever listing that you're looking at to get their listing, maybe you haven't sold in that exact neighborhood, but maybe a partner in your team and or brokerage has, and leveraging that. I think we're all here, at least with real estate experts, we all support each other. So I definitely feel the benefit in being able to leverage that. I'm never lying and saying that it was mine, but I am letting them know, hey, this is one of my partners. This is the kind of work that we've done right here in your neighborhood. And I think that lends well, because a lot of us do business in a lot of different locations. We're not always going to have a recent, past sale in that exact neighborhood. So that's something that I think helps, and especially helps with marketing, of course, but landing that listing and showing that seller that they can trust you and the firm that you're associated with. At least for me, that's been super helpful.
Awesome. That's totally relevant and valid. One of the things as we kind of move, we're about halfway through our session here, and we've talked a little bit about like how specifically to motivate a buyer by showing them what the numbers are, or how to motivate sellers and get them off the fence and change the narrative, that reminding them that, they're saving money on the market that they're buying in. But I think what's most important is really, like we talked about, controlling the narrative, but also kind of being the market expert. And so one of the things that, you're going to want to do to create or to be basically to like stay alive and stay in the game in real estate is you really got to know the market cold and be a student of the market. And so I want to share, I'll share here kind of what we're doing and providing kind of all of our partners, and even Joe, who's at Compass. I've shared this with him on forming what I'll call like your own relevant market opinion about the market, and being able to like express that in a real intelligent and way, because we open this thing by saying people don't necessarily listen to the best person, they listen to the person who makes it simple. And so when we look at that, this is kind of, I'm going to take 10 minutes and just run you guys through what we're saying and sharing about the market, knowing that our buyers are concerned about a recession, knowing that our sellers might be concerned about layoffs and interest rates. And so this is just a walkthrough on what we are sharing, because ultimately you got to be educated. This is what we're telling our clients to win in the market. If we're to simplify, to take a perspective on the market that you all can adopt and adapt, it ultimately is that real estate at its most basic level is supply and demand driven, but it's tempered by interest rates and our stock market. And so as we take our clients through this, and we just say, this is kind of the big thing that's been in the news is mortgage rates. What has ultimately driven the market is that rates, as we know, have doubled over the course of the last year. And that is what's put the downward pressure on prices. The Fed had the word that they used for their intention to raise rates with respect to inflation was demand destruction. And I think we can all agree they definitely destroyed the demand in the housing market. But in addition to that, we got what's happening in the stock market right now. And that's, a big part of our buyers. And this is what we tell our clients are, they're cashing in employee stock. And specifically, the NASDAQ is the most important market for us because 65% of the value of the NASDAQ is concentrated within 20 miles of Silicon Valley. And the NASDAQ's down 30% from its highs. So that's the other element besides interest rates that's, holding the market back. And ultimately, when we want to paint the picture for our clients, like this is what's happened. This is Santa Clara County going back. This is price per square foot for single family homes. And you guys in the chat is the link to those Altos reports if you guys want to use those and share them with your clients. But ultimately, prices peaked in March of last year at $960 a square. They've come down to $860 a square foot. That's about 10%. It's actually just slightly over 10%. But the question your clients are going to be asking is like, or many of them are because of what they're seeing in the news, is this a correction or is a potential crash ahead? And to understand that, I think what we want to do is take our clients on, and I tell them, I said, we're just going to have a little short history lesson on Bay Area real estate. This is looking at the last 40 years of Bay Area real estate. And as you can see, overall, it's up and to the right, but we've had these corrections. And why do we get these corrections? Well, it's because house prices grow faster than wages or salaries do. And then we have economic events like recessions and different things. But as we walk through a quick tour of what happened in our Bay Area market, in 1991, rates went way up because the economy got too heated. They went higher than they are now, 8.5 to 9.5%. And Bay Area home prices came down 11%. In 2001, we had the dot-com crash. At that time, the NASDAQ dropped 65%, but Bay Area home prices only went down 10%. The only time we ever saw home prices go down more than 10% was our Great Recession, which was a housing crash, and where prices dropped 27%. And then many people don't know, but we actually did have a correction in 2018. If you remember that summer, if you had listings, it was a painful summer. The Fed raised interest rates. They were pulling money out of circulation. And when they did that, FANG stocks, Facebook, Apple, Amazon, Netflix, Google, dropped 27 to 40%. And it causes our prices to go down about 8%. But what our takeaway when we talk to clients is where are we today? We saw that prices peaked last spring, and they've come down to $860 a square foot. And if we look back historically, our average correction, 3 out of 4 of those things were around 10%, and we're currently down 10.7%. But your clients are going to ask, yeah, that sounds great, but what about that crash where prices went down like 30%, 27% back in 2008? The question really is, what does it take to crash the market? And real estate supply and demand driven. So when we look at it, we go, what does it take to crash the market? It takes a ton of houses for sale. If you look back in 2008, we had 14 months of inventory, almost 10 times the number of homes that we have for sale today. If we look at this graph, that's what you see on the far left. There's 2008. About 2012, up until recent times, we've never really had much more than 2 months of inventory. And although the number of homes for sale is up over last year, it's just a fraction. There's very little chance of it crashing the market. This is looking at the last year of inventory. We have less than 2 months of inventory. The other question is, what about recession? We're hearing that in the news. That's the other thing that your clients are hearing. 3/4 of CEOs saying that we're going to be in a recession for the next 12 to 18 months. The question is does that mean we're going to go into a housing crash? Well, if we look at the last 6 recessions, half of them, the recessions we've had, prices went up. The other half, prices went down, except for our housing crash, they go down about 10 or 11%, and we're down at that critical 10% number. So the other thing that's coming up in the news that you can speak to and show the data about is layoffs. That's another thing that you're hearing. And if it hits close to home for your buyers or sellers where they or a friend has gotten laid off, this oftentimes will push them to the sidelines. But I think, again, using data to show what it really takes to have an impact on the housing market is important. So this is a quote from Morningstar last month saying Silicon Valley is the epicenter of most of the layoffs in the country, but experts are remaining hopeful because in December, 9-county Bay Area had a large number of jobs added where unemployment went down from 2.3% down to 2%. And again, showing them, here's what unemployment looks like. And guys, just so you know where these stats came from, there's a great resource called Silicon Valley Index. If you Google it, it's super cool. It's like a consortium of companies, universities, economists that collaborate all around Silicon Valley and what's happening both on housing and demographics and the economy and culture. And they measure all these things. But this is looking at the unemployment data going back just the last few years. That big spike you see is COVID. If you remember massive layoffs like in the service industry, the blue line you see is the United States, the green line is Silicon Valley. So we always tend to fare a little better than everyone else, but unemployment's like at that 2% level. So the question is is 2%, is it good? Is it bad? Well, then we take a look back over the last 20 years to see where unemployment has been and what it might mean. So when we look at prices for the Bay Area, when prices went down, it takes unemployment to get like to the 7 to 8% range before it seems to put any pressure on prices, pushing them down. So you could show your clients this and say, look, you know, it's 7 to 8% is what it's got to get up to really put pressure on the housing market. And we're way down at 2. But the question, you know, your clients are all going to have is will prices go down further? And I think we just want to come back to showing like what NECA did earlier, where she said when she shows her buyers what's going on with the market, you want to show them what's happening with supply and demand. And when we look at supply, this is again straight from those Altos charts. You can see inventory peaked in July and it's trending down. Now we are at typically the turning point. It's usually the end of Feb or early March when inventory starts to accumulate again. And so we probably will see that turnaround, but right now it's still low. And this is a quote from Lawrence Yun, chief economist of National Association of Realtors, about, you know, what we're going to see on the supply side. And that is the year ahead will probably see significantly fewer come to market as only the most motivated are willing to take on a mortgage at a rate and payment much higher than they have today. And so what's happening with rates? Well, because there's a slowdown in inflation and the inflation comparisons become more favorable, we'll start to see that inflation go lower and lower. And as a result, mortgage rates should move similarly downward, probably giving us around 5% or hopefully below 5% within the next 6 months. And that's Barry Habib from Mortgage MBS Highway. If you haven't followed Barry Habib, that's a guy, you write his name down, Google him, and get on, subscribe to his feeds, because he's probably like the smartest guy in mortgage when it comes to predicting the market. But again, this is just showing our clients, you know, mortgage rates, the good news is they are trending down. This is, again, data from the 4 major mortgage outlets, from Fannie Mae, Freddie Mac, Mortgage Bankers Association, and the National Association of Realtors, forecasting what they think rates are going to do throughout the year. So it looks like, you know, everybody's in line with rates looking lower towards the end of the year. As far as demand, you know, we should see buyers return. Everyone online, you guys all seeing more buyers at open houses? Tons, right? This is an interesting analysis of kind of what we call like a sensitivity analysis. What happens with demand as rates go up? And so this is the 30-year jumbo rate, and what happens with demand. So as we push towards that 6.5–7% number, we saw the buyer demand drop, right? Right now, we're at this 5.5%. And I think you're going to see in the numbers that we look at on the supply and demand in a moment on, you know, we're moving towards this balanced market. Mortgage applications is also another leading indicator. Like if we're trying to get a look at what the buyer activity is going to be like 3–4 weeks, maybe 5 weeks from now, basically buyers getting pre-approved is a good indicator of that. And this is looking at, you know, the down here at the bottom is the title of the page, tradingeconomics.com. Saying mortgage applications went down a little bit at the end of January, but after rising 28% on the week of the 13th and another 7%. So mortgage applications on the whole are up. But this is the piece right here that NECA touched on that we really like going deep on when we're talking to our buyers about writing an offer and how strong they need to be, or if we're talking to a seller that's maybe a little bit afraid of getting into the market. So at the bottom of those Altos reports, it breaks the market, whether we're looking at the county, the city, or the zip code, into 4 tiers. And so I'm going to just walk you guys through this real quick. This is Santa Clara County single family homes. And when we look at the top tier at 4 million, we had 25 new homes come to market last week. But take a look at this, 31 homes sold. Okay, it's obviously not 31 of 25. There's inventory, there's 650 homes on the market. But 25 came to market, 31 sold. At the next tier down at 2 million, 41 homes came to market and 42 sold. Third tier just below the median at 1,370,000, 43 houses came to market, 59 sold. And at the entry level tier of 880K, 26 houses came to market and 39 sold. So like you could be talking to the most basic person in the world and tell them, hey, look, real estate supply and demand driven. What do you guys see here? We have an equal or greater number of buyers than we have sellers coming to market. And so ultimately, the supply and demand is going to be one of the pieces, and the stock market, thankfully, is starting to find support. It's no longer going down, it's finding support. So where is the market headed? This is home price forecasts from a bunch of different forecasters. We pull this data from Keeping Current Matters. They provide a lot of these great slides for us, and then we layer in the local market data. But as you can see, Realtor.com is the most optimistic at 5% up, and Ivy Zellman, who is a forecaster, is saying -5%. So in summary, we're moving towards a more balanced market ahead. That's what we can tell our clients confidently. Look, you're not going to get clobbered if you're going to come in and buy a house. The market's not going to crash. And if you're looking to sell, there's probably, there's an equal or greater number of buyers in the market than there are sellers. So want to open it up to Q&A for folks online, and we've got looks like about 50 people here. So any questions for Nneka, myself, or Joe here?
And also feel free to write your question in the chat. I'll be monitoring it so I can get to that. But Anne, you had a question.
Yeah, I had a question. I would just say to Joe and Nneka, thank you so much for sharing your insight with us. I would say, what are you saying right now with all this data about where they need to be in planning to buy in the future, as it's layering in more people out in the market, more people at open houses? Are you trying to encourage people like, this is the time to buy now?
Yeah, let me share. I love whenever possible to, like Joe talked about when he opened up talking about what he does with buyers, is to show them rather than tell them whatever's possible. So, and if you're asking me that question as a buyer, I'd say, well, rather than me just kind of guess, let's take a look at the market together and see, let's see what it looks like. So if we're looking to get into the market, this is all of these Altos reports you can see these are 3-year charts down here at the bottom. And so the up and down we see is what we call seasonality. So typically it's like the end of February, early March is when the inventory starts to accumulate. So we'll start to see more houses come to the market. But at the same time, and what we can tell from experience is also more buyers are coming into the market at the same time. So, what we know right now is we have a little bit more supply than we have certainly than last year. And, here's the challenge with waiting. If you wait until rates come down further, your competition is going to increase dramatically, right? Because, and that's the piece where, when a market turns, when interest rates drop and a market turns and starts coming back up, it can go very quickly. Prices can move 3 to 7, 3 to even 10% we've seen in 4 to 6 weeks time. So what we know right now is prices are down 10%. Our average correction is 10%. So this kind of is what we're viewing as a window of opportunity. If you're concerned about the monthly payment, let's do one of two things, all right? Let's either look at a mortgage product like an interest-only loan that can get us a really low monthly payment that we can refinance out of when rates come down, but let's lock in that low purchase price that we can get today, okay? Or if possible, we might ask the seller if they could contribute a credit, maybe like 1-2% towards closing costs, and we can use that as what they call a buy down to get you a lower interest rate for at least the first year or two until you can refinance out. But most importantly, like there's some houses out there now, we know prices are down now, they're probably not going to go lower. We like to say, when I show people that chart of the last 40 years, real estate's gone on sale 4 times in the last 40 years. This is the 5th time. And so let's get you into the game. That's what I would share. Joe or Nneka, you guys got anything you wanted to add to that?
Yeah, I was just gonna say really quick, just in general, when you're speaking to your clients, I think the best way to show confidence is being confident enough to say what you don't know. So before everything that Brett just said, I always preface with my clients, I'm not a psychic. I do not know what's going to happen in this market. And honestly, no one does. The feds have lied to us in the past. The feds have been truthful all last year, telling us the interest rates are going to go up, and they did. So, prefacing it with that and saying, all I can do is share with you the data that I'm seeing, the experience from what I'm doing and what my colleagues are doing, and then we can make informed decisions together. And so, like everything that Brett and I and Joe have been saying, when you show them the data and you come to a conclusion together, it's way more trustworthy than you just pretending that they need to just believe what you're saying, because we could be wrong in 2 months and the whole market crashes, or it doesn't, or whatever, right? We have evidence showing that's probably not going to happen, and that's all we can go off of right now. So
Thank you.
Yeah, here's another point. And when we look at price movement over time, and this is just you and I talking as realtors, as we look at price movement over time, this is the last 3 years price per square foot in Santa Clara County. And if I were to rewind this, because I've been watching this for 10 years, what you usually see is most of the rise in price that happens in a calendar year happens between like March and June, like what we saw last year. And then what happens is usually prices will level off, unless we had a market like we did in 2021 where things were just, to the moon and beyond. But usually what we'll see is like between March and June, prices will rise, whatever the amount they're going to rise for that year. And then they usually level off. And that's because most people list their houses in the summer. Then we get June gloom where people, a number of people go on vacation, the market slows down. But most of that rise in price happens between March and June. So like that would be another point you could potentially share with your people.
I know too, in the spring that some people are shopping because they want to get the address to enroll their kids in school.
Joe, you have any additional thoughts for Ann?
No, I mean, it's you touched on it. I use the whole, real estate's only been on sale, 4 times in the last 50 years. This is, the 5th. I think that statement is very powerful, but piggybacking also off of what Nneka said is just, it's confidence, right? It's confidence when both when you speak and then showing the data, getting online and showing some of the reports from Altos. It's just so powerful. And really pinpointing, because, real estate, in terms of when you're talking about San Jose or any city, pretty much any city in general, it varies by neighborhood, how many homes are available in that neighborhood. So really just having data is for me the best way of making yourself be, that real estate expert.
Anyone else have any questions they want to ask? Regina, yeah, we can email you the recording, no doubt about it. Not a problem at all. Any other questions?
You want to go to those last couple slides, Joey?
Yeah. So the last little piece of the puzzle here is that we like to do these sort of masterminds every single month. And so we want you to be able to join our mastermind. So you can scan this QR code and we'll make sure that you have access to the monthly masterminds that we host every single month. That is always relevant conversations for the market of the moment. And this will allow you to get an email invitation versus having to see it on Facebook or having to watch the repeat of it sometime later because you missed out. So I'll give you guys a...
Yeah, in addition there, Joey, if you scan that QR code, there's a questionnaire. So, and we ask like, what topics would you like to see in future sessions so that we can make like this conversation as relevant as possible.
Totally. And if the last piece of this puzzle while y'all are scanning that QR code is if this information was valuable for you and we just moved a little too quickly and you really want to have a moment to deep dive on it, I would love to invite you all to a 30-minute strategy session, this QR code will take you to my Calendly. We can schedule a 30-minute conversation to go over everything that we talked about today and really give you a clear understanding of how you can communicate that to your buyers and sellers. So you don't just have to watch this. look, all of us have taken a training where we have a great training, we take a ton of notes, and then we take that binder full of notes and put it on the shelf, and we never use it again. Do not do that with this information, especially when it's so timely right now to have this information in a powerful, to communicate this information powerfully. So if you feel like you need a little bit more time, scan this QR code, or you can go to joeyscalendar.com. We can schedule a 30-minute session, and I will happily walk you through these things that we've talked about, because the agents at Real Estate Experts have been given this information about 2 or 3 weeks ago, and we've been having conversations around it for a while now. So we're pretty clear on how to do this. Other than that, Phil, that is our session. We actually ended right on time, which is unbelievable. Thank you so much for being here with us. We will host one of these every single month. In case you missed it, here's the QR code. Feel free to join us in our monthly masterminds. Thank you all. Hope you got some value out of this. Have a wonderful, wonderful day.
Thank you, guys. Thanks for letting me be part of it. Take care.
Thanks, Joe. Thanks, Nika.
Thanks, Joe. Thanks, Nika.
Thanks, Brett.
Thanks, Brett.
You.